Very sorry to say that we don't have Larry Goldberg here tonight because he is somewhere over the Atlantic Ocean or over Europe or landing. I don't know. He's somewhere out there right now on the beginning of his 3 months. I think it is 3 months away, but he will be here on a regular basis. Hopefully, we won't miss him too often. Well, today was kind of an amazing day on Wall Street. Bond yields went way up, but the NASDAQ didn't seem to care. It was up too. The Dow got crushed, which is kind of the opposite of what you expect. Tesla came close to getting back in the green after being kind of down most of the day. I'm going to take a very deep dive on the economy and also on Tesla later in this episode. I'm going to actually tell you about how I've decided that my estimate of a recession has been reduced to 40% as opposed to, I think I was at 60-40, now I'm at 40-60. But let's get the news out of the way first before we get out of that kind of stuff. So let's begin with possibly clearing up any misunderstanding from earlier today about whether BYD or Tesla had the greater sales in the first quarter of 2024. Well, by the way, it wasn't even close. So here it is from Barron's. For the first quarter, BYD delivered 300,114 cars. Now, those are BEVs. These are battery electric, not hybrids, not plug-in hybrids. You know, they sold another 300,000 or something of those. But in terms of the direct competition, all 100% plug-in vehicles, battery electric vehicles, that was 300,000. Well, we know that Tesla tomorrow is going to be way over 400,000. The lowest estimate I've seen is 407. The highest is around 440. So Tesla's going to be way ahead of BYD in the first quarter. So whatever happened in that one quarter that they managed to beat Tesla, we'll see if that happens again in the future. So the reign of BYD was short-lived indeed. Now, remember, I don't care whether BYD is number one or Tesla's number one, except for what? My competitive nature. Aren't you the same way? It's like, come on, team, we want you to win. Well, yeah, we all got a little bit of that. So yeah, I'd like to see Tesla win just because, but it doesn't really matter in the greater, well, okay, so it can matter sometimes if you're competing for the same dollar in the same market. And so you do want enough, you want Tesla to be strong enough to sell every vehicle that they can make. That's always going to be the goal. All right, let's go on from there. Unless there's a significant demand problem, we're going to see a lot more sales in quarter two than we did in quarter one. And so people that are thinking about what the number is going to be tomorrow and are worried about whether the stock will go down again tomorrow, it went down less than $1 today. You know, quarter one will be in the hindsight, and we'll be looking at quarter two. And I'm going to say that these are the things that we're going to be looking at. Number one, in quarter one, you've got consumer burnout from Christmas. You have consumer concerns about going out in a harsh winter condition in order to buy a car. And quarter one is always the worst quarter of the year for the entire automotive industry. So that's problem's going to be gone away. Quarter two is always way better just to begin with. Then number two, we will pick up sales in China because there's no Chinese New Year to subtract from the production potential. Now, there is apparently, we've never heard more information on this, but there was a slowdown to 5.5 days instead of 7 days in China. We don't know if that was true to begin with or whether it's continuing. No idea on that. Maybe we'll learn about that later this month. So, but we should end up with at least as many or maybe more sales in China as we had in the first quarter. Then we're going to pick up sales in Berlin because we're not going to have the Houthis destroying a supply chain for one product or two or whatever it was. That's not going to happen again. We're not going to have some kind of some protesters destroying electrical power and shutting down the plant for a week or more. Those things are gone, and so we should pick up quite a number of cars in Berlin. And then we'll have an increase in the United States because the Model 3 the ramp was really slow, so we'll get those ramping up and selling way more cars, Model 3 cars, and then the Model 3 Performance should be coming out real quickly. There's been a lot of spottings of those around Southern California in the last couple of days. And then, of course, a lot more Cybertruck sold because it's going to be ramping up. And we're hearing that it's around 1,000 a week now, but maybe by the end of the quarter, it'll be 2,000 a week. And we'll have an entire quarter of over 1,000 a week. So that'll be a pretty significant amount of gain. So we could be looking at somewhere in the ballpark of 500,000 again. Now, other factors that are going to impact the second quarter will be the halo effect of the Cybertruck. the halo effect of full self-driving being so amazing, and now the offer for 30-day free trial, and then the increased advertising that is just going to be continuing to build up more and more demand. So could we look at 500,000 for next quarter? Absolutely. Well, let's now talk about Tesla in general, where we are right now, what I'm thinking about. Tesla's top line news today, right today, should have caused the stock to go down. Everybody's worried about what the number is going to be tomorrow. So why didn't it go down? Why hasn't it gone down more? I think everybody was expecting that it was going to go down. And sometimes when everybody's on one side of a trade, that alone creates the opposite trade. A lot of people piling in right now because they think it might be the bottom. But first off, I'm sorry, that was number one. We also might be seeing a sentiment bottom. In other words, about all the bad news that could be in there is in there. What else could go wrong? We've had all kinds of things go wrong in the first quarter. There's no real evidence of new things coming up that would cause problems in the second quarter. So all the negativity has been squeezed out, and the market, and meanwhile, the market is enjoying one of the biggest bull runs in history in the last 3 months. Just craziness. 5 months, I guess it's been now. Really crazy. And so Tesla is really underperforming. And so you could, in a way, analogize it to where Tesla is right now, sitting back like it was over a year ago at 104. So it's not at 104, it's at 170 or 72.5, whatever. But it's kind of like it's sitting at that 104 position compared to the market's exuberance. The market is getting more risk on, and Tesla hasn't enjoyed that ramp. So all of this bad news is one way that you might look at it. However, and then in addition, Tesla has several major fundamentals, which the undercurrents are keeping it at these levels rather than having it drop even lower. Let's talk about those. So number one, many understand that Tesla is leading, it's the leading by far AI and AGI company. Not everybody gets that. In fact, it's our little secret that FSD is so far ahead. We've talked about that over and over on this show. And so there's a bunch of people that get that. And so there's another bunch of people that understand that embodied AI is a huge part of the future. It's not just the AI, it's got to have an embodiment. Like this headline from this morning, does AI need a body to become truly intelligent? Meta researchers think so. So the folks over at Meta think that you need the embodiment in order to really make it go. And that's where the future is. And I've heard this how many times in the last few weeks is, yeah, you can have the AI capability. You can be moving towards AGI, but how is it going to impact the consumer? How is it going to be something that is going to make money? And the way it's going to make money is to embody it. Number two, another large group of people are fully on board that robo-taxi will be a game changer. They've been willing to give Waymo a $70 billion valuation at one point. Those who get it also are undoubtedly paying attention to the major improvements of FSD this past week. Many are probably increasing their holdings as best they can, a little bit at a time, putting some more money in. I know a lot of people that are saying that they hope that the market stays low so they can put more and more in over the next few months. That's, again, kind of our little secret. We want to get fully invested before the market figures it out. Number three, the Cybertruck has not really seen any kind of boost from the absolutely astronomical introduction. Have you ever seen another car, truck ever, that's had this kind of an introduction, that's had all these major stars that want to be seen with the truck, that has gotten all these reviews that are just kind of off the charts in terms of the way people are talking about them? Well, you would expect in a situation like that you would see some kind of a big increase in the value of the stock. I think I was expecting that. I think you were expecting that, but we didn't get that. But I think that's another thing that's underpinning it. It's what's keeping it at 175 instead of at 104. The sentiment on the Cybertruck is another underpinning. Number four, the unit volume is a huge negative. I suspect that serious investors are probably itching to get more color on what's going to happen in the future. That's what they're looking at right now. They're looking, is this a one-off? That's probably what they're thinking. Or maybe quarter two and full year will also be huge disappointments. Some people are predicting that. Troy at I'm sorry. Yeah, try Tesla. He is predicting that we're going to be at 1.8 million or 1.79 million. I know some days he's got different numbers, but he has predicted we would actually have a down year over year. That's not going to happen. So then some people, the smarter ones, I think, in my opinion, are looking past the slump into the huge increases in 2025 when Cybertruck is fully ramped for the 250,000 level, when the Generation 3 is introduced and begins to ramp, and when the Juniper version of Model Y is out there as well. So some people are looking at least past this quarter into the rest of the year and saying, well, the rest of the year is probably going to be okay. Maybe we'll be at around 2.1, be around 2.2. And any one of those numbers will be fine, because guess what happens after that? 2025 will be a big year. And then, of course, you know my theory. If you watch this channel, you know my theory on 2026. That's when that's when the fire really shows up. Number 5, some, and not a few, are definitely figuring that they have an arbitrage advantage by paying attention to the energy storage play. I said earlier this morning, look, or yesterday, that energy storage is not going to be the barn burner 5 years from now, 10 years from now. Because why? Because it'll be a pittance compared to the robotaxi and compared to the Optimus. But long term, it's not going to be a big deal. Short term, it's going to be a big deal. Okay. It's going to be something that market's going to see, this really exponential growth in terms of the profits. And that is going to be something that some people are watching very carefully. I know this for a fact, but I know that a few are, but there may be a few 100,000 that are really looking at that energy story and saying, okay, this is where I'm really going to get my advantage, because I know this and most people don't. And then finally, and maybe this should be primarily, you have Optimus. Who knows what kind of money is already in the market, because some want to be part of that play. I'm sure that you might have some of your money in the market right now. Some of your money in Tesla might be because you don't want to miss out on the Optimus. You might be thinking, I need to get a little more in there before this Optimus thing really breaks wide open. And who knows how many people haven't gotten out. They were like, I'm getting kind of upset with this Elon guy and his tweeting or posting or whatever they call it now. And, I think I should get out of this Tesla stock. And you're going, yeah, but then there's Optimus and there's Robotaxi, and no, maybe I should stay in. So in a few minutes, I'm also going to do an editorial kind of like that on the economy and the market. But let's take a look at the economic news first. All right, we got Market Watch. Construction spending fell in February as U.S. companies and the government scaled back projects amid high interest rates. U.S. companies and governments scaled back their projects due to high interest rates. Spending on construction projects fell 0.3% in February to $2.1 trillion, the Commerce Department reported Monday. The figure fell short of expectations on Wall Street. They were expecting it to go up 0.7% in February, because January had been down. That's 2 months in a row. So they thought it was going to bounce back. They thought it had to do with the snow in January. No, it's not due to the snow. Apparently it's due, according to this person that wrote this report, this article, they think it's due to interest rates. There could be other considerations going on as well. And we'll keep an eye on this over the next few weeks to see what might really be going on. Construction spending data show how much the government and private companies spend on projects, including housing and highways. The more the U.S. spends on construction, the higher the level of economic activity. Over the past year, construction spending is up 10.7, but that's largely government and government subsidized. So all those big projects last year that I applauded, part of them I applauded the Biden administration for putting together. The CHIPS Act and the what do you call it? The one that had to do with the Tesla, getting I'm always forgetting the name of it. The Inflation Reduction Act, IRA. Sounds like a terrorist group or something. Anyway, in terms of residential real estate, private residential construction rose 0.7 in February, with single-family construction rising 1.4 and multifamily construction falling. Because why? If you've been paying attention here on this channel, you know that the rental units are now over available. There's too many rental units right now and not enough residential housing. But that means if the residential housing was up 1.4, that means that the roads and infrastructure and that kind of spending, factories, et cetera, was down even more. Spending on public residential construction fell by 1.2. Then this report on manufacturing, a barometer of business conditions in U.S. manufacturers, turned positive in March for the first time in 17 months. And another side that the industrial side of the economy is on the mend. The Institute for Supply Management Index of Manufacturers rose to 50.3 in March from 47.8% in the prior month. Echoing these numbers and other good results from the manufacturing sector, S&P Global's own manufacturing PMI reading out Monday showed U.S. manufacturing production reaching a 22-month high in March. The firm's broader measure of manufacturing activity hit 51.9% in March, down from February's reading of 52.2, which was the highest since July of 2022. So we've got manufacturing beginning to pop back up. We're seeing it over and over. Almost every reading we get right now shows manufacturing coming back a bit. But we'll talk about some of the negatives. What's negative when that happens? Oh, you mean raw materials start to go up in price. We'll talk about that in a second. From CNBC's Squawk, Kevin Hassett cites studies showing productivity increases of 10 to 20% after a month or two of adding AI tools. These are studies being done at Stanford that you put these tools in place. Now, so far, he says it's mostly these customer service type things, which we've heard about. If you've been watching this channel, we've talked about it. But these are the kind of amazing results that you can expect. And if these things continue, we could be looking at a 90s type of productivity decade. Capital spending is down 2 quarters in a row, he said, and consumer and government spending is definitely running out, okay, if you will. We'll talk about that in a minute too. He says, so then what my point is here, all right, data that we know right now, he says in his article, he says, data that we know right now will not allow the Fed to cut in June, okay? And I'm going to agree with him. And here we go, all right? As the chairman of the Fed loves to say, we will change, I will change. I'll change my strategy if the data comes in different. I'll change my thinking if the data comes in different. I've been saying a 60-40 chance we have a recession. I'm changing now to 40-60. 60% we do not, 40% we do. And quite frankly, I'm on my way to thinking that there will not be a recession. All I need is a few more data points, and I could be on the side, like I was all of last year, of saying no recession, no recession, no recession, when everybody was saying there would be a recession. But right now, the market is way too exuberant, and that's one of my big worries, way too exuberant, because we've got some really stiff headwinds that the people don't appear to be paying attention to. You know how sometimes when you get all that exuberance going, you don't look at those negatives. And I've got 10 of them. I hope you've got time for 10. Number 1, oil. Texas Intermediate is up from 70 to 84 since December. It's easy to figure that out. That's a 20% increase since December. And there's no evidence that it's going to retreat anytime soon. We're heading into driving season. That's usually when oil prices go up even more. Associated with that, gasoline is up from $2.05 to $2.76. That's 35% since December. And also very likely going higher because now we have to change over to the different gasolines, and there's shutdowns and all kinds of things of the manufacturing, and there's already apparently some shortages. And so that's probably going even higher. On inflation, while true-flation is at 2%, the CPI, PPI, and the PCE are showing readings more in the 3 to 4% range. So where are we really in terms of inflation? If we've got inflation already at 3 to 4%, you've got all the oil prices, gasoline prices going up, and now maybe raw material prices going up as well. How are we going to keep that inflation down or have it continue to go down to the 2%? The deficit is another issue, big issue, huge headwind. It's out of control. And everybody that I listened to today, I get one headline and one talking head after another saying that the deficit is out of control. Interest expense is now the 3rd largest item in the budget. And there's zero plan to bring down spending or the deficit. And quite frankly, the Republicans have not suggested much of a plan either. At least they're talking about cutting back the headcount, maybe doing a zero budget where we have no increases. Something's got to be done because the economy someday will have to pay the piper for this. Except, well, we'll talk about the except in a minute. Number 5, the jobs numbers are not what they seem. We've been talking about that for a while. We'll see what happens this Friday. I'm not going to go into that detail again. If you haven't heard what I've had to say on that before, I think you can look at Friday night's show with Larry Goldberg, and I think you'll see us talking about that. Number 6, gold has gone nuts even as the dollar is very high. Typically, they don't go up at the same time. So you got the dollar. If it drops, then gold will go even higher. The gold thing is crazy high. Nobody's really saying much about that in terms of what that means for the overall economy. Number 7, no chance that the Fed lowers rates in June. That's my new position because of all the things that we just talked about. Now, if there's some really bad numbers this Friday or next month, that could change very rapidly. Okay, but I'm not expecting really bad numbers this Friday. What I'm expecting is a continuation of not very good numbers. And I'm expecting, I said it earlier this morning, I believe, I'm expecting we're going to stay at 3.9 or go to 4 in terms of the unemployment rate. 8, consumers are running out of money. Savings are down. Credit spending is up. Consumers are running out of money. They were the half of the reason why the economy is doing as well as it is right now. And the other half is government spending. It can't continue to increase at these rates. Right now, anybody that's hoping the economy continues to bump along at a decent level would just be hoping that the government wouldn't cut spending. But if they can't keep increasing it, it's certainly not the way they did last third quarter and last fourth quarter. So that's impossible. Number 10, manufacturing PMI shows inflation at the factory gate picked up. The survey's measure of prices paid by manufacturers rose to 55.8 from 52.5. Listen to that. Up 3 from 52.5 to 55.8, indicating that raw material prices increased last month. 24% of companies reported higher prices compared to 18% in the prior month. Okay. All right. Then there's the saving grace. You know what I'm going to say. If you watch the channel, you know exactly what I'm going to say. It's productivity. If we do get 1990s type productivity increases, we will see disinflation, maybe even deflation, and it's good deflation. We will have interest rates declining. That will help the debt and the interest rate payments by the federal government, and that will have a ratcheting effect, okay? As interest rates come down, the dollar might drop a bit. The rest of the world is then forced to match those interest rate declines if they're going to keep their reserves high enough. Outstanding productivity could create some short-term employment issues. Definitely could. Might be bad for a month or a quarter or 2 quarters or 3. But long-term, productivity increases all wealth, helps everybody out, and increases demand, and therefore creates more jobs. So some jobs are destroyed by productivity, but other jobs are merely enhanced, and then new job categories are formed as the country as a whole, the world as a whole, becomes more wealthy. So you, out of what I just told you, pick your direction. The amazing changes that are coming in AI and robotics and medicine and transport and energy are going to create abundance. But there could be some difficult bumps getting there. And I suppose that's why buy and hold is such a popular investment theory. Well, as of the reporting today, I have lowered my thinking about the recession to 40%. And then if we see better than expected news in the jobs data this week, I think I will probably go to no recession. That would mean full-time jobs. That'll mean not big reductions in the numbers from January and February. That will mean more hours worked, not less hours worked. You know the points. Okay. However, keep in mind, if the economy continues to rock along at these 2 to 3% GDP increases, and inflation stays at 3 to 4%, the Fed will not only not lower rates, they will be forced to raise rates. Well, let's take a look at where the market is right now. And we have got Tesla, first of all, is down $1.58 in the aftermarket. So after being down 57 cents and at some points being down a lot more, being down like around 170, it is currently sitting at 173.64. Let's go in and take a look at the bonds. We have got the 10-year, after being up 13.5 points today, is down 13.5 basis points, We have it in the pre-market being down 2.2, but that still leaves it way over my 4.25 at 4.307. We've got the 2-year also down almost exactly the same amount, keeping the spread at about 31 basis points. Yeah, about 38 basis points. So not quite 40. So that's a little broadening out again. But the 2-month is up 1.8 basis points, which means that the 2-month is spreading out again in terms of the inversion. So you can't make this stuff up. Hard to understand what's going on with these bonds continuing to be so much inverted. We must be at least at 20 months now, maybe 21 months. Yeah, I got to double check that and make sure we will. I'm sure Kathy Wood will bring it up on Friday. So be sure to listen Saturday morning with, I'm hoping, Larry Goldberg from Paris, helping me talk about the Kathy Woods report on Friday, which now comes out typically on Saturday morning early. Okay, oil prices are up 23 more cents in the after hours, or the pre-market, sitting at almost $84 a barrel for Texas Intermediate. Brent is unchanged at 87.42. Okay, natural gas down a little bit in the after hours after being up big during the regular trading, sitting at $1.83 right now. We have got the dollar continuing to be very strong, holding in there. We have got gold up another $14 at 22.71. Now, again, I'll just mention it one more time, and then I'll only mention if it's important in the future. But a lot of this could be foreign federal, the reserve, the central banks of a lot of the countries around the world have very low gold reserves right now, and they are buying gold hand over fist. Copper is up 0.11, sitting at $4.05 now. So this has been a continuing trend this way, which Larry would say is a good sign for the economy, and which I would say is a bad sign for inflation. And a good sign for the economy, quite frankly. Okay, then you've got the Bitcoin down another 1,321, sitting under 70,000 at 69,690. And you've got the equities right now in the pre-market. You have got the Dow futures down another 140 after being down 300 today. You've got the S&P, which is up, by the way, 0.35%. You've got the S&P down 7, which is 0.13%, and the NASDAQ down 30, which is 0.17%. Let's go back and check to see if Tesla has moved since we last talked. It's still sitting just about down $1.70. All right, so that is where we are. Listen, Brian White and I, we did a show earlier today where we talked about what it will take to get the narrative on Tesla to switch to being about AI and about robots, about four-wheel and two-legged robots. Brian is not nearly as optimistic as I am about how that's going to change and when it's going to change. But then I guess that's no big surprise. Anyway, we had a great discussion. If you didn't have a chance to see that one, you need to check it out. Here's the card for that. Love to have you hit the like button and the subscribe button and the notify button. And we'll be back tomorrow with all the regular shows, including Brian White again, and then Nicholas Gibbs in the evening. You don't want to miss Nicholas. He really, really brings it. Okay. So that's all I got for you tonight. And it's been great talking to you.